Hey everyone, tax season is here, or quickly approaching anyway. And in this video, I want to share with you my favorite tool that can help you estimate your taxes, including your potential refund. It's free, it's easy to use, so stick around and I'll show you how it works. Before we get started, please remember to like this video and subscribe to my channel. I'm creating new videos weekly on saving, investing, and early retirement. TurboTax is probably the biggest brand name in do-it-yourself tax software. And whether or not you use TurboTax to prepare your taxes, I highly recommend their free app available for the web or your phone called TaxCaster. TaxCaster can help you estimate your federal tax situation, including how much you might owe or how much you might get as a refund. It can also help with tax planning by giving you a better understanding of how federal income taxes work. This way, you can control how much you pay in taxes and avoid any unpleasant surprises when it's time to file. I'm going to demonstrate the TaxCaster app on iPhone because it's just so easy to use, but it's available on the web as well as a web app in your browser or on Android as well. So let's open up TaxCaster and take a look. When we open up the TaxCaster app, the first thing you're going to see is this dial across the top that says federal refund. And as you enter in your information, that dial will either swing to the right if you're expected to get a refund or swing to the left if it expects that you would owe taxes. And then just underneath that is a series of tabs. You've got My Info, Income, Tax Breaks, and Review. And I'm actually going to start with Review in this demonstration because it's going to show you big picture what is going on with your federal income taxes. It's set to a single filer, so it's going to have $12,400 in deductions in there. I'm going to assume you're somewhat familiar with how federal income taxes work, but there are the tax brackets, and for single individuals, your tax rate is 10% on up to $9,875 of taxable income. And then the next $9,876 through $40,125 is taxed at a marginal rate of 12%. So that's your taxable income. And of course, there's going to be $12,400 of deductions taken out of your gross income before that taxable income is determined. So back to the app. Let's just go through this real quick and I'll show you how easy it is to use and how it can give you great insights and help you do some tax planning. All right, so for a single filer, you're going to start out with a clean slate here and $12,400 of deductions. All right, so back to the My Info tab, it's going to just ask you for some basic information like your birthday, if you're married, if you have any dependents. And over in the Income tab, this is where you can add your W-2 income from your employer, if you have that. And you can enter in your taxable wages. I'm going to say $50,000. Already it's showing you owe $4,318. We're not going to put in any federal withholding. Now, I'm sure your employer does withhold from your paycheck, but for the sake of this demonstration, I'm just going to leave it blank. And let's jump over now to now that I've just added that W-2 income, let's jump over to the Review tab and we can see what's going on. So you got $50,000 of income at the top, $12,400 of deductions, and now we're at $37,600 of taxable income, which if we go back to the tax table, you'll see would put you into the marginal tax rate of 12%, almost bumping up into the 22% bracket, but not quite there. Of course, with a marginal tax rate, it doesn't mean that all $37,600 are taxed at 12%. It's just that first $9,875 is going to be taxed at 10%, and the remainder will be taxed at 12%. All right, so as it stands right now, your total federal tax is $4,318. And quite simply, if you had more than that withheld from your paycheck throughout the year of 2020, then you would be getting a refund. If you had less than that withheld, then you would owe some money. If you go back to income, let's make this a little bit more complicated. If you had, if you're self-employed and had some business income, you could add that in here. If you sold some stock or had any interest or dividend income, you can enter that. Let's go ahead and enter some long-term gains. Let's say you had $5,000 of long-term capital gains. You had some interest income, $100. You had some dividend income, let's say $1,000, and no other types of income, although you can see that they do have some other possibilities here, including miscellaneous income. With that information entered, let's go back over to the Review tab and see how that affects things. Now your income has jumped up to $56,100 because you've got the $50,000 in W-2 income, you've got the $100 of interest, and you've got $5,000 of long-term capital gains and $1,000 of dividends. And after the standard deduction, you've got $43,700 of taxable income. But notice now you've bumped up to the 22% marginal tax rate. So every dollar above $40,125 of taxable income is going to be taxed at 22%. And that puts your total federal tax at $4,885. The other interesting thing about being bumped up to this level is we can go over and look at the 2020 capital gains tax rates for long-term capital gains. And if you have taxable income under $40,000 for an unmarried individual, you'll pay 0 on your long-term capital gains. That is quite nice. But if you go up and over $40,000 of taxable income, now you're paying 15% on those gains. So this is kind of a big deal. If you had, in our example, $5,000 of long-term capital gains, well, it sure would be nice to pay 0% on that rather than 15%. But our individual here is, in fact, up over $40,000 of taxable income. Is there a way that we could lower that amount to get this individual back under $40,000 of taxable income? Well, it would have been nice if this individual had contributed to his 401k, assuming he had one throughout the year. But if he didn't, or if he did and he still got taxable income over $40,000, what can he do? Well, there is another option. He could contribute to a traditional IRA. What would that do? Well, that will act as an additional deduction, lowering his taxable income. So let's try to lower this individual's taxable income so that the long-term capital gains are not taxed. You need to lower it by more than $3,700. So we'll go over to the tax breaks tab, and down here there's this question: did you contribute to a retirement fund? You say yes. Are you eligible to participate in a retirement plan at work? We'll say yes, but let's assume that whether this individual did or did not, they still need to lower their taxable income a little bit more. So we're going to put in $3,701 of contributions into a traditional IRA. Now note that the contribution limit to an IRA in 2020 is $6,000 for an individual. So if this individual wanted to contribute more to an IRA than $3,701, they certainly could. Maybe the remainder could go into a Roth IRA instead, because this is enough to get the individual's taxable income down under $40,000. All right, by putting that in already, you can see the amount due has dropped pretty substantially down to $3,880. If we go back to the review tab, now taxable income is down to $39,999. Marginal tax rate is down at 12%. The total federal tax is now only $3,880. And the nice thing about IRA contributions is you have until the tax filing deadline to contribute. So once you have all your numbers in place and you're filling out your taxes, or by using this free app, you can see exactly to the dollar how much you need to contribute to a traditional IRA to get you under a threshold to avoid paying capital gains. All right, now let's look at an example of a married couple filing jointly. Now, married couples filing jointly have it really good because if we go back over to our tax brackets, married individuals filing joint returns can earn up to $80,250 of taxable income and still be only in the 12% marginal tax bracket. In addition, they have double the standard deduction available. So if we go over to my info and say, are you married? Are you filing jointly? Yes. And now look at the review tab. You'll see that deduction has indeed doubled. So starting out, you're already $24,800 ahead. In other words, this married couple could earn $24,800 of income, and that'll be taxed at a rate of 0. Well, let's make things a little more interesting for a married couple filing jointly. Let's say they have one child under the age of 16. Let's give them some income. One spouse makes $50,000. And what the heck, maybe the other spouse makes exactly $50,000 as well. Now, if we jump back over to the review tab, we'll take a look. So there's $100,000 of gross income, $24,800 of standard deduction, which results in a taxable income of $75,200. They're still only in the marginal tax rate of 12%, and they would owe $8,632 in federal taxes. But because they have a child, that's going to wipe out $2,000 of that tax bill. So really, they would only be paying $6,632 in federal taxes. Pretty interesting to see how that all works. Now, if we go back over to income and make things a little bit more complicated, we'll say that there is some long-term capital gains here for this couple as well. We're going to give them, let's give them $10,000 of long-term capital gains. And we'll go over to maybe they sold some stock for whatever reason, which resulted in $10,000 of long-term capital gains. And now you can see their gross income is up to $110,000. They still get that $24,800 deduction. Their taxable income would be $85,200. And they're now bumped up to the 22% marginal tax rate. But they still get the child tax credit. Their estimated federal tax due is $7,412. Now let's jump back over to this long-term capital gains chart, and you can see that for married individuals filing jointly, they will pay 0% on their long-term capital gains as long as their taxable income is under $80,000, which is pretty generous. But jumping back over to the app, you can see that our pretend couple here has $85,200 in taxable income. Uh-oh. We want to bring them back down under $80,000 of taxable income so that they will owe 0% on that $10,000 of long-term capital gains. So how can we do that? Well, just like we saw with our single filer, we're going to turn to the traditional IRA. All right, so we need to bring their taxable income down under $80,000. We're going to go over to the tax breaks tab. We're going to go down and say that they did contribute to retirement fund and that they maxed them out. Why not? They're making $100,000 between the two of them. No reason they couldn't max out their traditional IRA. So for one spouse, we'll say $6,000. The other spouse also contributed to a traditional IRA. It's another $6,000. So let's see the result. All right, their $110,000 of gross income is now reduced by $32,600, bringing their taxable income down to $77,400. Of course, this brings them under the magical $80,000 number so that they're paying 0% on their long-term capital gains. In addition, their marginal tax rate is now down to 12%, which helps as well. They would be paying $7,696 in federal taxes if it were not for that child that they have, which gets them a $2,000 credit. And so their federal taxes are only going to be $5,696. Really quite good on $110,000 of income. And in fact, if we do the math, if we take $5,696 and divide that by $110,000 of income, they're paying 5% on their gross income. I mean, that's pretty low, wouldn't you say? And there's other opportunities as well to bring that down further, such as contributing to an HSA or contributing more to their 401ks at work, assuming they have them available. All of these things bring down that taxable income further. Another interesting calculation we can do is the rate they're paying on their taxable income. So we know their marginal tax rate at this point would be 12%. What's the actual rate they're paying on their taxable income? To determine that, we're going to take 7,696, divide it by 77,400 of taxable income. And we get just under 10% rate of return, not rate of return, 10% tax rate, just under a 10% tax rate. So that's the rate on their taxable income. So you can see their marginal tax rate is 12%, but that doesn't mean they're paying 12% on all of that income. It averages out to only a 10% average tax rate. And some of it is going to be taxed at zero because it's long-term capital gains. So you've got this kind of mixture of tax rates in there. If you do know how much is being withheld from your paycheck, you could even put that in here if it was, I don't know, $5,000 withheld over here. Maybe your spouse has also got $5,000 withheld from his or her paycheck. And now, you can see that this is how you end up with a refund, because withholding is taken out of your paycheck throughout the year. And then when you go to prepare your taxes, it all kind of evens out and you see if you paid too much or too little based on your actual tax situation. So people tend to obsess about how much they're going to get as a refund or how much they're going to owe. But the really important number is actually the amount of federal tax that you're paying overall. So in this case, I would say the total federal tax of $7,696 minus the $2,000 child tax credit gives you the magic number. $5,696 of taxes is what this married couple is actually paying to the IRS. And the fact that they had $10,000 already paid to the IRS through the withholding just means that they're getting that money back as a refund. It's not anything really extra. It just means that they had too much withheld from their paycheck. Some people would even call it a loan to the government. It's probably not a huge deal. It's sort of like you put away this little chunk of money that you just kind of forgot about, and then you just get it all back at once. So it feels good to get a big chunk of money back as a refund. But the reality is it was your money all along. It was just being held by the government, and then they're just giving it back to you. It's not really a bonus. I think a lot of people just go through the tax year and do what they do. And then when it comes time to file their taxes, they find out what they owe or what their refund is. There's very little, if any, forethought or planning or strategizing. It's as though preparing taxes finally reveals what's inside this mystery box that you've been eyeing suspiciously for the last year. And you just get to open it up and surprise, it's a $4,000 refund. Or maybe it's not. But that's not the way to do it. I think a smarter way is to use this tool, use this free app to really get a feel for your tax situation throughout the year and make smart tax moves. Just have it on your phone and you can do some light tax planning throughout the year just on your own. If you know or can estimate how much you're going to make in the year, and some other things like if you can estimate how many dividends you'll get, and if you're going to have long-term or short-term capital gains, estimate the amount of interest you might receive, you can get pretty darn close to your actual tax situation without having to actually go through the full tax preparation process. This is just a quick and dirty way of estimating and letting you know what kind of moves you can make to improve your tax situation, such as contributing more to an IRA or an HSA or something like that. Maybe if you have taxable investments, maybe you can sell some of them to capture some gains and raise your cost basis while paying 0% on them. If you can pull something like that off it's all about just knowing and not guessing and not finding out after you file your taxes what you could have done better. Using TaxCaster lets you plan ahead of time, be thoughtful about it. And you can do this kind of thing yourself by just knowing a little bit about how the tax code works and this free app. You don't necessarily need to I'm not saying you shouldn't talk to an accountant or a tax professional, but I'm saying you can also get a feel for it yourself by using this free app and just knowing a little bit about the tax code. And like I said at the beginning, there's also a web version of this. I will link to that down in the description below. And if you want to get it for your phone, look in either the App Store or the Google Play Store, and I'm sure you'll be able to find it in there and download it for free. All right, everyone, so that's the video on TaxCaster. Thank you for watching. If you enjoyed this video, if you got some value out of it, go ahead and give it a like and consider subscribing to my channel. I'm creating new videos weekly on saving, investing, and early retirement.